The S&P is up more than 8% this year, which isn't bad, but you would have doubled your money if you had invested with the Wells Fargo Advantage Growth Fund, a Bloomberg Best Equity Fund for the first quarter. The fund also has top-ranked returns over 1, 5, and 10-year periods. Tom Ognar is the portfolio manager, and we're glad to have him here on Street Smart. Tom, thanks for joining us. Let me ask how you do it. I mean, such great returns. Everybody would like that kind of return on his money. What do you look for?
You know, it really starts with a great team. So we have a great team of analysts and portfolio managers, and we spend a lot of time kicking tires, meeting with companies, and really staying focused. I mean, we don't try and do a lot of things. We look for three things. We look for robust growth, we look for sustainable growth, and we look for underappreciated growth in our companies. And when we find all three, those are the stocks we want to own for our clients.
So you're doing a bottoms-up approach here. I see in the notes it says when shopping for companies, look for something you can invest in and own for 10 years, which sounds like great advice. On the other hand, I was just talking to Scott Black, quoting, I believe, Benjamin Graham, saying it's hard enough to forecast out past 1 year. How can you look at a company and say, I want to hold this for 10 years?
Yeah, we agree with that. And so, you know, our objective going into an investment is to look for those companies that can be growth companies for the next 5 to 10 years. But, you know, I also agree that, you know, the long term is made up of a lot of short-term data points, and it's up to us to continually be monitoring those data points. And when they change, we need to act decisively for our portfolios and make sure, you know, if there are better opportunities for a company and we need a bigger position, we need to be adding to those positions. And when you get situations like you did in last November, and you know, I think it became at least obvious in our research that, you know, Cisco is no longer the robust company it once was, then we need to move on and find other great companies that have robust growth prospects to really put into the portfolio.
Let me ask, before we get to your picks, actually, about when you step back and take a look at this economy, with Ben Bernanke's press conference in mind. I mean, the global economy, the U.S. economy, what are your general thoughts?
It seems like it's getting better. So when we talk to companies, I think you're seeing it in the companies that report. If you look at just CAT today, you know, I think is a good example of better economic prospects around the world. When we talk to companies, whether they're technology companies, industrial companies, or consumer companies, you know, whether it's in the U.S. or overseas, it seems like things are incrementally getting better. And, you know, from our perspective, you know, that's a good tailwind to be invested.
Let's get to your picks then here. Julie, I'm going to ask you to talk to us a little bit about Apple, because it's one that Tom likes, and I want to hear what you have to say and then get Tom's feedback.
Well, the milestone that was sort of interesting that Apple crossed, that we learned it had crossed last night, is that its net profit for the first quarter was larger than Microsoft's. That's the first time that's happened in about 20 years. You can see the trajectory of the two stocks today, with Apple going up, Microsoft going down, and that's been sort of the longer-term trend as well. Another milestone that Apple reached today is that in the first quarter, its phone shipments, not just smartphones, although I guess everything it makes is smartphones, but mobile phone shipments, we got the numbers from IDC for the first quarter, and Apple surpassed ZTE, a Chinese phone maker. It had happened in the third quarter, then flipped back in the fourth, and Apple edged out ZTE again in the first quarter. And really what I'd like to ask is, you know, when you look at those numbers, Apple globally is still way behind a Nokia or an LG, even though those are smaller names here in the U.S. So does Apple eventually need to push more aggressively globally, even though obviously its growth here in the U.S. hasn't been shabby?
I think you're right, and I think it might not be obvious, but I think that is happening. So if you look at where their fastest growing markets are right now, it's countries like China. They're growing well north of 100% in China on a year-over-year basis. And I think, you know, Apple is a phenomenal growth story, a company that grew revenues about 82% last quarter, grew iPhone units, you know, a product that's been out for about 5 years now, grew units over 100%. Yet it trades at around, based on our projections, around 13 times calendar 2011 earnings. You know, to us, it shows the opportunity, I think, that is still left in the market.
Is it possible that some competitor here knocks Apple off its sort of king of the hill position?
Yeah, it's something we watch every day, and I think, you know, Nokia is a good example. I was just talking to a client of ours over in Norway earlier this month, and we were talking about Nokia and how Nokia used to have that dominant position and really let that get away from them. And I think you always have to be watching out for that. And is there that possibility that that happens? We think there could be. We don't see it right now. We really feel like the best products out there on the market, whether it's on the iPad side or whether it's on the phone side, are coming out of Apple.
Do you like any of the competition, by the way? Do you like Research in Motion? Do you like HP? Any of the competing tablet or phone makers?
Not right now. We just don't see, and I think Apple's been brilliant with their iPad strategy. They price that product so sharply that you aren't seeing competition come in with even equivalent product priced at the same amount, and product that is a lot of times priced higher than you can buy an Apple iPad for. And at this point, it seems like, from a consumer's perspective, why would you buy a product that's not superior to the iPad if you have to pay more?
Well, let me ask you about CarMax. You like that stock, and I'm wondering if it's a play on the consumer's sort of increased sensibility after this recession.
It is a little bit, but really what we like about CarMax is that opportunity for growth, not this year, not next year, but over the next 5 to 10 years. It's a company that has about 100 used car auto stores. They sell what's called late model used cars, so cars on average about 3 years old with about 35,000 miles on them. And, they have 100 stores today. And, we think there's the opportunity that they could grow that to the 300 range. And it's a proven business model. And the other thing we love about it is how they buy their inventory. They are by far the largest purchaser, not only seller, but purchaser of used cars in the country. And because of that, we think they're the smartest purchaser.
No haggle pricing. They know their products better than anybody else. They give you what they want, and they'll sell it for what they want.
I think it's a great consumer experience. You go in there, they're not going to haggle with you. The salesperson is not incented to upsell you a car. They get the same commission no matter if you buy a Cadillac Escalade or if you buy a Ford Focus.
Let's talk quickly, just about 30 seconds left, about another pick, St. Jude Medical. Why do you like it? Healthcare obviously seems like a place where you'd see a lot of uncertainty.
To us, sometimes that presents opportunity, and so we're looking, again, for those companies where the market may be underappreciating the growth opportunity going forward. And we see St. Jude Medical really as a share gainer, taking share from the Boston Scientifics, taking share from the Medtronics of the world, and really innovating with new products, whether it's on the heart side, whether it's on the neural stimulation side, that we think has some longevity to it, and we really feel like should benefit over the years as consumers demand more and more healthcare.
Got it. Hey, Tom, thanks so much for joining us. Really appreciate it. Tom Ognar there from Wells Fargo Funds Management. Take a quick break.